Hello, YouTube, and welcome back to Generational Growth Investing. Today I'm going to give a portfolio update. It is April 26th, and unlike my other video, this is just going to be a straight portfolio update with some changes that I made and where it stands right now. We're almost at the end of April, which means we've been doing this for one whole year. Uh, the dividends so far, there might be a couple more that come in. Not sure. It's April 26th. On Robinhood, the dividends that have come in are $551.15. So we broke the $500 milestone, which is super awesome. Really seems like the next milestone is basically $1,000 a month. Again, this is not financial advice. I'm just kind of showing what a dividend portfolio could look like. I wanted to see how it would work and maybe inspire other people to also learn about it. This might be part of a larger strategy. I can't decide for you. See a financial advisor if dividend investing is right for you and all of that. This is just to show how this could work. So, anyways, we broke the $500 barrier, $500 per month, and the next one I think will come in at $600 a month, which is pretty cool. And there might still be a few more that trickle in. We'll see. The next update will be next month, and we're at $1,772 for the year so far. Moving on, the graph on the left is just the yearly sum. So in April of this year, we've surpassed all of what we did last year, which is pretty cool. And this chart on the right is just all of the dividends per month starting last year. We started this last year, and so we expect this graph to basically just go up and to the right. October and August were a little off because we had like a high risk fund in there that we did end up dropping. It was paying a high dividend, but it was just losing NAV like crazy. So we basically broke even on that. These are all the funds that I currently have, and I'm going to go over some changes that I made and how they're doing. First, I'm going to look at SPYT. However, I might do the same thing for XPay, but I think uh, SPYT is kind of my riskiest holding at a 21% annual yield. It has a risk of NAV erosion. Same with XPay. And we've seen it drop a lot more than some of the other funds, but it is holding steady. And as of this update, it did go back up to its negative 2.4%. These drops in the middle here were kind of the geopolitical stuff. I mean, SPYT went down all the way 8.55 negative in the negative. So I'm calculating the actual return here. We brought in $621 in dividends from SPYT, and being down about 2%, it's down $147. So our final take on it right now is $474. So it is in the green for us, even though it's gone down. And we're going to see that with some other ones like JBBB and Claws, even though they're a little bit in the red. All the dividends from holding these for a year or more are going to make up for, but we expect these to basically just hold steady. So we'll look at those. I also redid the weighted average. I did buy some Amazon and I redid the weighting. So the weighted average for all of these brings my total dividend yield into 13.39% with all of these, and these are the weights that I have. So that's pretty cool if you're following along. And I'm going to do a compound interest calculator doing the 13.39%, which is going to be pretty cool. Um, What else? I am still holding some Amazon, which is not a dividend, but I thought it was in quite a dip, and so that is working out pretty good. I'm not really trying to do short-term day trading, anything close to that, swing trading, whatever. But I watched some other investing channels, and just looking at what I was looking at, seemed like a good time to buy some Amazon. But it's not being calculated in with the dividends. Eventually, probably roll that into the dividends, all of that. So that's what's going on with this, 550 a month, which I think is about $17 a day, which is pretty cool. We're looking at what, almost $4,000 for this year. What else? So I updated the returns. I know this isn't like super fancy or anything, but I'm just kind of slowly tracking when I make videos what the returns are on this stuff and graphing out so I can see any trends. But the big news is that I mentioned in the other video, I did drop SCHD and SPHD. Main thing was SCHD was up 12% in returns, and that was great, but I didn't really know how sustainable that was, and this is really more about the dividends. So I cut that, and I also cut at SPHD, partly because they're just the lowest yield at 3%, 3.9%, and it's great to get this. I would personally, I feel like unexpected return, but I rolled these in to spread these across. So there's new weightings all across the board. I made in green here the ones that went up. So I have the old weight and the new weight. JEPQ went down a little. SPYI went down a little. Obviously cut these two. JEPI's up in the weighting because I spread these out, right? GPIC is up. The ones I put into the most are XPay, CLM, ASGI, CSWC. I really like these. So these are up a lot higher, and I am going in. So my portfolio is a little riskier now, right? I have a lot more in XPay. It's approaching what I have in SPYT, which did go down a little bit with all this movement and stuff. Probably this is risky enough for me for now. And so with all of this, like I said, the weighted average is 13.39 annual return in dividends. This went up a lot after cutting these lower return. The lowest return I have is JAAA, which is fine. So overall, you can see the portfolio is less conservative. Now, as far as the returns, you know, a lot of things have basically returned to, well, we all know the main market has gone up. So it's kind of interesting to look at this. JEPQ right now is as high as, well, besides whenever this was, it's back up almost to as high as it's ever been. Um, and these numbers do not reflect the dividends. They're buying back in, which does affect the total return, but this does not include the dividends, right? So a 1-year annual yield, if this is up 4.42%, it's not counting the 10% yield with this number. This is just what the holdings are, which I know to some of you it will make sense, but that's just what it is. So as the market, I believe, has basically returned all-time highs, JEPQ's almost as high as it's ever been. SPYI has recovered quite well. QQQI is basically as high as it's ever been since I've held it. Same thing with GPIC, up 5.6%. which is just great. JEPI is had a stronger recovery. It's kind of flattened out. It's okay. Dropped these two. JAAA. JAAA, JBB, and claws are basically flat, which is what I expect for these. If we look at the quick and dirty little chart here, I mean, they did go down more than I expected, but these three are lower dividend, but they're kind of defensive. They should basically just stay flat. Um, what else do we have? SPYT holding steady. It's kind of what it usually is. I mean, this is good that it's only down 2% because that makes me think there isn't like this major NAV erosion. It's doing well as the overall market has recovered. IWMI. So these ones I really like this set. However, it's less predictable to me what the returns are supposed to be. I understand the dividends and I like how high they all are. But I mean, this is a reason to still be diversified because so this is attractive, right? 13% annual return, but I don't know how to predict how this fund will, what the movement will be on this fund. It's kind of held steady. It dipped down. It came back up to 2%. Now it's down to 1.6%. Is this just going to kind of stay flat all the time? And I'm just looking at this dividend. Is it going to slowly go up? Like things like JEPQ and QQQI, which have a great dividend, but they should also trend with the market. I don't know with IWMI. Same thing, CSWC. I mean, this thing really popped off. Last time I looked at this, this was up 7.47% return, which is just like I don't even know how do I expect that or whatever. Of course, I did almost double the holding, which is going to affect this number, but it's back down to a 1.59% return. So I don't know how to predict the movements in these funds. ASGI also popped off last time, and it's basically holding steady. CLM down a little bit, but not as bad as it was a couple months ago. XPay doing awesome. This was another one that I don't know as much about risk of NAV erosion with XPay. Very similar to SPYT as far as it seems like a riskier position, but all I know is during the big drop, it didn't drop as much as SPYT. It recovered and still didn't drop as much as SPYT. And as of today, it's in the green. It's almost as high as it's been since I've held it, which is still doing better than SPYT. So that's why I increased the weighting on this a lot. Let me know if you have opinions on XPay. It's seeming awesome, and I did make the portfolio more risky. Hopefully I don't regret that. Are there any funds that I'm missing? Any funds that I should take a look at and consider incorporating into this overall dividend portfolio, this overall dividend strategy? Let me know. I know some people really like SCHD and SPHD and others like this, but the yield is just, it's so low. Not 100% just yield chasing. I do need diversification, and some defensive things like JAAA, JBB are defensive. But when I look at the yield compared to some of these other great funds that I have, I mean, even something like JEPI, compared to the HDs, it's half the annual yield, and it's was feeling hard to justify holding these when I've got another fund I feel very confident about that has double the annual yield. So it seemed like these were just going to be laggards no matter what for me, and I took advantage of SCHD being popping off at 12% return. So, like I say, any other funds I should take a look at, I'm willing to take a look at them and diversify more. And that's where we're at. I think we're going to break $600 next month and on the road to $1,000 monthly return. So, next, I'm just going to do a quick thing on Compound Interest Calculator, one of the websites I like for just a quick and dirty look at where we're at. So I was looking at this in the last video, and let's do 100. Let's do 150. Let's do 1,000, 30 years, and I mean, right now my interest rate is 13. What did I say it was? 13.3 something. I'll just put 13.3 monthly. Calculate, and we want to see this has $1 million at year 12 and 3 million at year 20. That's pretty good. I'm going to change this to 200K and see where we're at there. We got $1 million basically at year 10, but we'll call it year 11. And we got $2 million at year 15, which is great. That's what we want to see. Year 25, 7 million. Yeah, this 13% return is quite a lot. I don't know if it's sustainable, but that's what my weighted average is telling me, is based on all these, and then I put in the weights, like how much of the portfolio they are, and the annual yield, and it's telling me 13.39. One other thing I'm going to check, and let's do 65K. So at 13%, that still puts me at $1 million at year 15, which is pretty good, and year 22 million. So anyways, that's the way the portfolio is going right now, and I hope that looking at some of this stuff might inspire you. As I kind of said from the beginning of starting all this, it's been basically a year. I wanted to see what this would look like, and I knew. So we did end up dropping the riskiest positions, which I think was smart. All I know is that investing takes, there's different, I think there's different personality types for investing. There's people who want to do the swing trades. There's people who don't want to check their portfolio at all and change anything. There's people, yeah, they just want to set it and forget it. I do have auto buys on, which really helps. But some people want to just set the auto buys, take the whole market, just whatever S&P 500, set those auto buys, and just they're not going to look at this for 10 years or something. That's one personality type. Some people want to do more timing the market, swing trades, whatever. Some other people, So we have all these personality types. I want to do the thing that inspires me to do more, and I like seeing, at least with Robinhood, I don't know about other apps or whatever, but I can see these dividends come in, even when they're only $1 or something. I can see them in the app, or it alerts me, or whatever, and I want to find ways that inspire me to keep going. There's a lot of criticism on dividend investing. You know, is it going to lag way behind a more traditional portfolio, something like that? And I see the different debates and everything, but one channel that I saw, I think, put it really well that at the end of the day, if you're doing something rather than nothing, you're doing good. And if you do S&P 500 and it gets you to comfortable retirement in the timing that you want, that's great. If I do only NASDAQ and it gets me there faster, but it's riskier, you know, there's gonna be all types. There's gonna be people that found out something like NASDAQ only is gonna produce a better return. I think a lot, or maybe even just, there's the channels where people just pick individual stocks. I did buy some Amazon that turned out to be a really good thing to do. There's the people that are whatever kind of investors they call them, where they're the value investors, right? They're looking for specifically certain types of companies that are in certain stages, or they're looking at more the income. These are whatever they're investing in Meta and Apple at certain times, these railroad companies, whatever it is. Um, and that takes some work if you're managing that. And I've seen, yeah, people are saying, well, I got 100% return in the last 13 months by doing Meta plus Microsoft plus whatever. And so there's always going to be things that you miss out on. That drives If that drives me crazy, seeing that, then maybe dividend investing's not for me because I'm always feeling like I'm missing out. But I don't really feel that way. I like being able to kind of predict, do these investment calculators. Feels nice. I feel like I don't have to worry as much about a particular company having bad news, or they change their CEO, or they have a bad product launch, stuff like that. Am I going to miss some gains? Always. You're always going to miss some gains. You're always going to miss them somewhere. There's always going to be a company that does better. So that's that. But when I when I see the dividends coming in and they're hitting the account, at least that makes me want to do more for my future with this. Whereas, yeah, something what we might call like a more traditional, more boring investing, just holding Microsoft for the next 20 years or whatever. I think you have to invest to take advantage of what works best for your personality. I did have times where investing just in individual companies, I would end up selling when they went down, or they'd go up some amount and I would sell thinking, okay, I locked in my profit or whatever. But then it would just keep going up more. And then I'd do something else and make a mistake. I think for my personality, the dividends, they it seems like they just reward holding, because the longer I hold, the more I see the dividend come in, and I am so much less tempted to sell, because yeah, even if this is down 1.8% and I like this fund, and right now, yeah, CLM is down 1%, I don't feel like selling because, well, the dividend's coming and I don't get that if I sell. So, are there ways to make faster, bigger returns? Probably, but I have to invest within, my personality type and what makes sense to me. So, anyways, that's the portfolio update, and we'll see where we get next month. Thanks for watching.